Everyone's watching the same show. Big tech companies, especially those making the chips that power AI, are the stars. Names like Nvidia are everywhere, and their stock prices have soared. It feels like a gold rush. Everyone's chasing the companies selling the picks and shovels. But what if the real opportunity isn't in the obvious tech stocks? In finance, the most crowded trades are often the most dangerous. The biggest profits are often found where nobody else is looking. Far from Silicon Valley, a quieter story is unfolding in Europe's old financial centers, the banks. While the world obsesses over AI hardware, European banks are quietly funding the infrastructure behind the revolution. The AI boom isn't just about chips and code, it's about building data centers, power grids, and networks, all of which require massive capital. That money comes from somewhere, and increasingly, it's coming from European banks. This is the secret backdoor to the AI boom. Banks, providing the loans that make the physical build-out possible. It's a trade based on the real, tangible needs of the future, not just the hype. These boring banks are positioning themselves as the producers behind the scenes, making the entire AI show possible. For savvy investors, that might be the most profitable role of all. AI's promise is dazzling, but it's built on a very real, very expensive foundation. AI lives in data centers, massive power-hungry buildings filled with servers and chips. The world needs a lot more of them, and the expansion is expected to require over $1 trillion in new infrastructure. This is one of the largest capital expenditure cycles in history. The $1 trillion price tag covers data centers, energy, and upgraded power grids. AI is incredibly thirsty for electricity. A single data center can use as much power as a small city. Without a huge expansion of power infrastructure, the AI revolution stalls. Building this infrastructure isn't something tech companies can fund alone. It requires enormous, long-term loans and complex project financing. Enter the banks, especially European ones, which see this as a stable, long-term growth opportunity. Financing AI infrastructure has become a core business strategy for these banks. They're experts at structuring big, complicated deals and deploying capital. Since late 2023, data center financing has exploded in their loan portfolios. While others bet on which AI model will win, these banks collect steady interest from everyone building the road. They're earning from the essential, non-negotiable part of the AI boom. This isn't just theory. It's happening now. BNP Paribas is a major lender for digital infrastructure, funding new data centers and networks across Europe. Deutsche Bank backs massive energy projects powering the AI boom. Santander is focusing on green data centers and sustainable tech infrastructure. ING participates in huge syndicated loans for the most complex projects. These banks aren't waiting for business, they're actively seeking deals, building teams, and marketing their expertise. By financing infrastructure, they profit from the AI boom without the wild risks of the tech sector. Loans for data centers are secured by physical assets, and demand is driven by the entire AI industry. Whether Google, Microsoft, or a startup wins, they all need a place to run. Banks are acting as landlords for the digital economy, collecting rent in the form of interest. This diversifies their business and provides a stable, high-growth revenue stream. The AI infrastructure boom lets them put their balance sheets to work in a way that's both profitable and essential. They're not just funding a trend, they're funding a fundamental shift in the global economy. European banks aren't just funding AI, they're transforming themselves with it. They're building internal AI factories to make operations faster, smarter, and more secure. This dual role, as financier and user, gives them a unique edge. AI is revolutionizing fraud detection, risk modeling, and customer service. Dutch neobank Bunk uses NVIDIA-powered AI to spot fraud in real time. AI-driven risk models help banks avoid catastrophic losses by simulating thousands of scenarios. PayPal's European arm slashed data analysis costs by 70% using AI. AI-powered assistants like Bunk's Fin answer customer questions instantly, improving service and freeing up staff. AI automates compliance, scanning transactions for regulatory issues. By embedding AI, banks are building a more efficient, resilient, and profitable business for the future. Look at Germany's Sparkassen. the backbone of German retail banking. Through their tech provider, Finanzinformatik, they're building one of Europe's most ambitious on-premises AI factories. Finanzinformatik serves hundreds of savings banks, handling everything from core software to customer apps. They've invested in a massive internal AI platform using NVIDIA software. This centralizes AI for the entire network, giving even small banks access to world-class tech. AI automates document processing, reduces errors, and speeds up customer service. It analyzes customer data while respecting privacy to offer personalized advice. This isn't happening in the cloud. It's on premises, with hardware and data staying in secure German data centers. The goal: digital sovereignty, keeping sensitive financial data under German and EU control. By building in-house, they ensure compliance with strict privacy laws. It's a model for innovating while maintaining trust and security. Digital sovereignty is now a driving force in European tech and politics. Europe wants to control its digital destiny, not rely on foreign tech giants. Data privacy, security, and economic independence are at stake. Sensitive sectors like banking demand that data stays under European control. The idea of private financial data on foreign servers is unacceptable to many leaders. Regulations like GDPR enforce strict privacy standards. On-premises AI factories like those in Germany guarantee data never leaves their control. This is becoming a regulatory requirement, not just a preference. European banks are natural partners for building sovereign AI infrastructure. As Europe builds its own tech sphere, banks are at the center. Digital sovereignty has inspired new technologies designed for privacy and control. Cisco's Sovereign Critical Infrastructure portfolio, launched in 2025, is a prime example. It's a self-contained AI system banks can install in their own data centers, completely air-gapped from the outside world. Banks get state-of-the-art AI with absolute privacy. Not even Cisco can access it. This meets strict EU regulations and customer demands for security. Banks can upgrade tech capabilities while satisfying regulators. They're becoming experts in deploying secure, sovereign AI infrastructure. Big tech companies now recognize they must respect Europe's digital sovereignty. As more sovereign solutions emerge, adoption grows, strengthening Europe's independent tech ecosystem. Banks, as financiers and early adopters, stand to benefit most from this build-out. The first to spot big trends are often institutional investors, pension funds, asset managers, hedge funds. While retail investors chase hot tech stocks, the smart money is quietly buying European banks. These banks are undervalued and perfectly positioned for the next phase of the AI boom. Their stock prices are cheap compared to American banks, overlooked for years. The AI infrastructure boom changes everything, providing a new engine for growth. Institutional investors see growing loan books, efficiency gains from AI, and the tailwind of digital sovereignty. They're not speculating, they're investing based on clear evidence. Quiet accumulation of shares signals a sector about to be revalued. As the market wakes up to banks' critical role, a wave of new investment could follow. The smart money is moving in before the story becomes obvious. Banking has long been seen as boring, lacking the excitement of tech, but in the AI gold rush, that stability is a strength. Tech stocks are volatile and risky. Fortunes are made and lost overnight. European banks offer a different path, investing in the essential infrastructure of the digital economy. Their profits aren't tied to a single AI model. They're tied to the undeniable need for more data centers and networks. This makes them a stable, resilient way to play the AI theme. Their own AI adoption is making them stronger and more efficient. The push for digital sovereignty gives them a protected, long-term growth story unique to Europe. These boring banks could be the surprise winners of the AI era. As the trillion-dollar cost of building the AI future becomes clear, the market will recognize who's funding it. In this gold rush, it might just be the bankers, not the miners, who end up with most of the gold.